Hey all, welcome to ShareTrek where science meets investments, and I'm your host Raj. What if I told you that the next big breakout for a rare disease biotech might not come from a flashy new IPO, but from a company quietly building commercial muscle and preparing for a potential regulatory win in first half of 2026? That's what I believe is happening with a company called Ultragenyx. Stay with me. We'll cover their Q3 2025 results, what that means for their bottom line, how the commercial engine is humming, and why the upcoming resubmission of UX111, that is called PYZ 111, could turn the optimism into reality. Let's start with the numbers. In Q3 2025, Ultragenyx reported total revenue of $160 million, up roughly 15% year over year. That's driven primarily by their core approved therapies, which consist of Crysvita, generated about $112 billion in the quarter, Doyolvi, which pulled in around $24 million, Evkeeza contributed around $17 million, and Mepsevii contributed around $7 million. It's already revenue producing, unlike other companies we have in our genomic watch list, and it has got multiple therapies, and it has already had experience of manufacturing. The company reaffirmed its full year 2025 revenue guidance at around $640 million to $670 million, representing a 14 to 20% growth target. From a commercial perspective, this is aligned with my bullish view. They can execute on approved products. They can expand geographies into Latin America, Turkey, EMEA for Crysvita, Doyolvi, and Evkeeza, and that gives a foundation. While the big new catalyst, which I'm excited about, is UX111, which is in the wings. That said, it's not all smooth. The net loss in the quarter was about $180 million, or a loss of around $1.81 per share. Also, operating expenses remain high. R&D plus inventory buildup plus other costs were significant. So the commercial engine is running, but there is still a runway to profitability. If you're finding this breakdown helpful, friends, I would like you to hit the button that says like out there. It helps other biotech investors find this information through this video. That said, let's get back to our topic. Having multiple approved therapies already in the market, like Crysvita, Doyolvi, Evkeeza, Mepsevii, means Ultragenyx has built commercial, regulatory, and manufacturing infrastructure as well as experience that reduces execution risk compared to a pure early-stage gene therapy company. For example, the Crysvita Latin America and Turkey business is growing. In Q3, Ultragenyx reported approximately 50 new start forms in LATAM region and about 875 patients on reimbursed therapy in that region. In EMEA, for Evkeeza, they noted 310 patients in 17 countries receiving reimbursed therapy. Now, what we know about Ultragenyx is that they previously received a complete response letter, or CRL, from US Food and Drug Administration, FDA, for UX111, citing manufacturing or process issues, and it did not comment on the clinical data. Complete response is usually a final letter from FDA either accepting or rejecting a drug. Now, the fact that there was no comment on the clinical data but only on the manufacturing indicates that there is a remedy for Ultragenyx to get UX111 into commercialization. They already have experience in manufacturing, and in their Q3 call, the company stated they have had constructive interactions with FDA and have reviewed the additional long-term data requested by FDA. They stated confidence in a BLA resubmission in early 2026 and recall that FDA review time could be up to 6 months. So from an investment perspective, that means if resubmission occurs early in the year, best case scenario, and review goes smoothly, first half 2026 approval is plausible. It could maybe get pushed down a little bit, but in 2026 we're going to get that. And there are a few qualifiers to keep in mind. Manufacturing validation still needs to clear regulatory scrutiny, which was the root of the complete response letter from FDA. And early 2026 resubmission does not guarantee first half action. It depends on FDA queue, review period, and any additional questions FDA may come back with. Once approved, the rare disease market uptake, pricing reimbursement, especially outside US, will definitely matter to the revenue generated by UX111. And investment implications is the other thing we have to look at, along with risk. From an investment standpoint, here are what I see as the key implications. A successful UX111 approval could add a new commercial product, enhance pipeline credibility, and potentially drive short to medium term re-rating of the stock. Continued growth of core approved portfolio like Crysvita, Doyolvi, and Evkeeza across geographies help de-risk the business model. Then we have their past manufacturing experience, which means that they are more likely to be able to execute the commercialization of UX111 much better than any others could have if they didn't have that experience. There are a few risks that I would like us to monitor. As mentioned, manufacturing or CMC remains a regulatory overhang for UX111. Any further issues will delay approval and erode investor confidence. The company is still operating at a loss with sizable cash burn. The pathway to profitability, which the company has targeted for 2027, still depends on pipeline and cost control. Rare disease therapeutics involve pricing, reimbursement, and market access challenges, especially when expanding geographies. We also need to look at the broader biotech market risk, which consists of sentiment, regulatory environment, macro environment. All of that affects mid-cap biotech valuations. My take on this company is that the setup is solid, but execution is key. The commercial muscle plus approved catalyst, if both deliver, the upside is meaningful. If either misses, for example, a delay in UX111 or slower than expected commercial growth, the risk-reward profile could shift. But at the same time, if the company keeps a good control over the costs, it has got some buffer out there to kind of mitigate some of the risk. Now, here is what we as retail investors should track in the coming quarters for Ultragenyx if we are interested in this company. We have to monitor announcements for the UX111 BLA resubmissions, look at the timing, and then suss out FDA acceptance of the filing based on past records. We also have to look at quarterly updates on the approved commercial products, patient starts, geographic expansions, reimbursement wins, all of those things. We also have to keep a focus on cash flow, operating expense trends. Are they narrowing losses as revenue grows? Is there a good cost control being applied? And how is the cost control working? Is it being administered on areas which do not matter that much? So those are all the things that we have to pay attention to. Any additional manufacturing or CMC disclosures or regulatory delays for UX111 or other pipeline assets could definitely cause a big problem for this company. So we have to keep a watch out on the press notes for exactly these things. And in terms of market reaction, I would say valuation metrics, analyst commentary, potential re-rating once the catalyst approaches. These are all the things that we have to look, because at the end of the day, there are big analysts who can move the markets with their pronouncement. So not only do we have to form our own opinion based on what we see in the press, but we'll also have to look at major analysts and how they interpret the happenings, because what they say is what will direct the trajectory of this stock price. Friends, what does it look like in your country? Are you seeing rare disease therapies gaining tractions? Let me know where you live and where are you watching this video from. Put all that in the comments below. I would like to hear how local access and reimbursements compare. And also for our viewers at ShareTrek, have you invested in Ultragenyx? And if you have, what is the situation of the stock in your portfolio? Are you in a loss situation like I am, or are you profitable? So give me an idea of what is your strategy. Put that in the comment section. I'll always love to read your comments and it keeps me informed. And friends, thanks for watching this video. If you found value in today's deep dive, consider subscribing and joining the ShareTrek community. You can also join our free Substack for a more detailed version of this topic. The link is in the description. See you there soon. Well friends, this brings me to an end of the video. Bye for now.